So while most traders are dumping their holdings amid the recent crypto market crash, Shiba Inu has maintained a strong position among the whale tier addresses. And in this video, I'll explain why this is huge for Shib and where we are headed from here. But before coming to it, let's see the overall crypto market outlook. So the crypto market has been battered in a brutal 48-hour period, with some coins recording falls as sharp as 20% of their overall value. As a result, initially, the overall crypto market cap came down 15% to the $2.2 trillion level, but is now back at the $2.3 trillion level. And now if we give a closer look at Bitcoin, the market price of Bitcoin fell down 26% from week-long support of 57K to go down to the 48K mark. In addition, the Bitcoin market experienced $1.3 billion total liquidations in the last 48 hours, with almost 735 million liquidated in Bitcoin longs on this drop. As a result, Bitcoin's bear market canceled out the 2-month-long bull market since September 29, where Bitcoin soared over 60% to attain an all-time high of 67K by November 8. Similarly, Shiba Inu has also been losing ground as it is down 8% in the last 48 hours. Shib was actually trading well in the last few days as it gained by almost 30%. However, it couldn't bear the immense pressure that the overall crypto market faced in the last 48 hours. However, the silver lining for Shib is that whales are not losing interest in it. According to whale stats, while the majority of traders are liquidating their positions in the face of the crypto market slump, Shib has remained one of the most secure positions on whale tier addresses. And as per the overall whale holdings in the top 1,000 Ethereum wallets, Shiba Inu continues to retain the biggest position among whales, with $2 billion in Shib tokens currently held. In addition, the value of holdings has remained constant along with the percentage or dominance of whales. As of now, Shiba Inu holdings accounted for 8% of total holdings, while other smaller tokens accounted for 7% of total holdings. So it is quite clear that Shiba Inu has remained the most popular with whales during both the local bull and bear crypto market cycles. And with the present flash crash of the Bitcoin and altcoin markets, Shiba maintaining a solid position on whale tier addresses is a bullish indication for it, indicating that Shib can gain traction in the long term. In addition, Shiba Inu supporters will be pleased to discover that over 2 billion Shib tokens were burned last month, meaning those coins are no longer in circulation, and this is a bullish indicator for Shib. Now it appears that the Shiba Inu community frequently burns Shib tokens. At the start of November, the Shiba Inu token burn tracker reported that about 41% of the total tokens were burned, and as of December 2, this figure had risen to almost 42%, representing a nearly 1.9 billion increase in tokens burned throughout the period. And in total, the number of Shib coins burned has surpassed 597 billion. Now, I said this is a bullish indicator for Shib since coin burning is a method of preserving the market value of crypto assets and attempting to mitigate inflation. In theory, when a large portion of a coin supply is removed, the coin's demand increases and the price skyrockets. So with Shib having a high rate of burning tokens, it is expected that Shib will get a price increase in the coming days. In any case, where do you think we are headed from here? Do you think Shiba Inu is going to surge amid the market-wide crash? Let me know in the comments section below. And with that being said, let's see some important crypto updates. So we know that the subject of inflation has been in the news a lot recently, with some of the more prominent analysts stating that there are also solutions to the problem. And the greatest ones are cryptos. And in this context, Robert Kiyosaki, author of Rich Dad Poor Dad, recently expressed his fear that working-class Americans will be wiped out by growing inflation unless they invest in 6 critical assets. He explained that the Fed just produces money and distributes it to banks to keep them afloat. Additionally, Kiyosaki cautioned that unrestricted money printing as part of official government policy will result in the abolition of the working class. As a result, he advised investors to begin safeguarding themselves by purchasing Bitcoin, Ethereum, silver, and gold. Similarly, a recent report by Cointelegraph stated that while blockchain technology has advanced at a breakneck pace, the financial products and services accessible to institutional investors are falling behind. For example, 24 of the 70 crypto ETP on the market represent ownership of staking tokens, yet just 3 generate revenue from staking. Not only do ETP holders miss out on the return, but they also pay management fees ranging from 1.8% to 2.3% on average. And the report indicates that missing out on staking yield is more than a missed opportunity for crypto holders, as it results in holding a highly inflationary asset. And due to the fact that the yield provided to stakers is mostly of new tokens, any unstaked tokens are constantly reducing in relation to the overall supply. All in all, the report suggests that purchasing cryptos without staking them is the modern-day equivalent of stuffing cash under your mattress. So investors need to stake their cryptos if they want to avoid inflation. And now coming to our next update, Quadency, a New York-based technology startup, recently announced a complete revamp of its crypto trading and strategy automation platform. The platform was completely rebuilt from the ground up to enable users to access cryptos on both centralized and decentralized exchanges via a single account. And as per the official announcement, Quadency's proprietary platform will undergo a significant overhaul as part of the upgrade, which will include extended automated strategies and tools, a faster, more streamlined user experience, and a considerable reduction in trading fees. The platform and its associated exchange will give users a centralized point of access to a diverse array of crypto assets. In addition, the firm believes that facilitating access to both centralized and decentralized sources will solve crypto market fragmentation, a major source of frustration for the crypto industry. Meanwhile, more and more reports are coming from India about the upcoming crypto bill. And this time Nishal Shetty, co-founder of the India Wants Crypto movement, discussed the possibilities for India's much-anticipated crypto bill. And according to him, there are some unconfirmed reports about the most critical laws that may be included in India's upcoming crypto bill. To begin, India may outlaw the use of self-custodial crypto wallets. As a result, Indian officials may prohibit operations involving decentralized wallets. Then, only exchanges involving individuals with Indian registrations will be permitted within the country. And by prohibiting this class of wallets, Indians will be unable to connect with the vast majority of decentralized finance protocols. At the same time, it is improbable that international crypto providers will adhere to the Indian Financial Regulatory Watchdog standards. All in all, it appears that the Indian authorities are trying to limit the illicit use of cryptos. However, as I mentioned in my previous video, they are not planning to ban crypto. And now coming to our next update, U.S. Senator Elizabeth Warren has taken aim at Bitcoin mining companies following her recent criticism of the crypto space. Warren recently wrote a letter to Jeff Kurt, the CEO of the New York Bitcoin mining firm Greenidge Generation Holdings. She stated that given Bitcoin mining's exceptionally high energy consumption and carbon emissions, mining operations at Greenidge and other plants raise concerns about their impact on the global environment, local ecosystems, and consumer electricity costs. She added that crypto mining has significant environmental costs and is increasing consumer energy prices, and this is a state of concern for her. Now we know that the U.S. has become the hub of crypto mining after China's crackdown, so it is not surprising to see some individuals concerned about it. However, we have seen that mining companies are now using efficient methods to limit the environmental impacts. So I don't think that this is such a major issue. Meanwhile, a recent report indicates that Americans have lost up to $956 million to investment-related crypto crimes between Q1 and Q3. This equates to a staggering 277% increase in investment-related crypto scams in 2021 when compared to the previous year. So it is evident that along with widespread crypto adoption, crypto-related fraud is also developing at a breakneck pace. And seeing this, I think everyone involved in the crypto space should do their part to limit all these scams, as they are hindering proper crypto regulations, since authorities are already concerned about such fraudulent activities. And coming back to Shiba Inu, we have a major update for it, as Shiba Inu has been added as CoinGate's newest crypto, which means that any CoinGate user, from merchants to traders or gift card consumers, can now accept, purchase, trade, or spend Shib on the items they want. So I think that Shib's integration with CoinGate services will excite the Shiba Inu community, since over 500 CoinGate businesses can now accept Shiba Inu payments from their customers. Moreover, this is a bullish indicator for Shib amid this major market meltdown. And as we know that Shib has been affected by the overall crypto market pressure as it fell down by more than 8%. But seeing these major updates for Shib, I think that it is bound to gain traction from here, not right away, but in the long term.